Hey guys, sorry, welcome back. Computer froze there. I had to reboot everything. Man, we had a good session too. We were starting off pretty good. Shit, I hate when this happens, but let's see if we'll get everyone back on YouTube. Slowly, we'll get everyone back. As long as I got you guys all on Zoom, everyone's here. Um, okay, guys, I apologize about that. But I got so much shit going on with all these computers and monitors and all kinds of things over here. It's hard to keep up with all this stuff. I think the OBS and all of the other stuff I do streaming takes a lot of juice out of this and freezes all this. But hopefully everyone will be back. We'll give it a couple minutes, okay, guys. We'll give it like 5 minutes, and then we'll have everyone back. Okay, so when I do the top-down analysis, do you guys care what security I do it on? Do you guys want to see me do it on a whole different security, or do you guys want me to do it on gold, or do you want to see something different? Anyone on Zoom want to let me know? Do you guys want to see silver? Gold. Guys, remember, we're not like, we're just doing it something different to analyze the top down analysis. But like, I won't be looking for trades. I really want you guys to learn. But whatever it is, if you guys are comfortable with anything, maybe if you guys already did gold, maybe you guys, we can look for the same points of interest and things like that. Okay, why don't we start off with gold? Okay, we'll do gold, but I'll also do silver. How about we do two top downs on today's call, gold and silver? Okay, then we'll do. Okay, so there it is. Okay, so we'll start off with gold, and then I'll do silver. So you can see how I do both of them. Okay, so if you guys want silver, just stick on the call. We'll get gold out of the way, and then we'll do silver. Okay, so we'll do both of the metals together. Okay, I just want to give it one more minute, make sure everyone gets back in here, guys. I'm sorry about all of that, what just happened. But sometimes I can't control the computers and that stuff. But as long as we're all here together, we're going to learn all about top down. We've got a good 90 minutes to go, so we can take our time with this. And also, guys, I encourage you guys to ask questions, okay? There's no dumb questions. I encourage you guys, okay? So, just for everyone, just to recap, if you just started, we have a blog dedicated on top-down analysis. If you just visit our website and you come down here, there is a blog that is dedicated to a top-down analysis. I just read it before we just got shut down, but it is here. There is a blog, and it is all about the top-down analysis. I encourage you to read it. It might take 5 minutes out of your day, and when you read it, you'll learn a lot about top-downs, okay? It is somewhere in here, but I know that there's a lot of blogs that we have. It's somewhere in here. There's a lot of blogs. Oh my goodness. Here it is. So the date is April 5th. 2025 is when the blog was released. So if you guys want to mark that date down, maybe you know what I'm going to do, guys? It just gave me an idea. On the weekend, I'm going to go through each one of these blogs and we have the dates right here. So I will write April 5th is a top down blog. I will write, whatever the blogs are. Okay, so we'll clean this up. I'll clean this up for you guys, so we don't have to be scrolling. Then we know whatever the blog is. We know the date, and then you can literally scroll down and find it. Okay, there we go. Ron just learned something new. How to make this more convenient for everybody. Okay, so everybody knows the importance of a top down. And now I'm going to show you how I do it, okay? We talked about, before we got shut down, I was talking about the color scheme. Again, I use my colors that I've been using for years because they mean something to me. Like every time I see the volume get to these color-coded lines or zones, I know what it specifically is. If you guys are learning, while you're learning, you can write what the line is so you guys can get more familiar with this. But I'm telling you, when you get really good at this, you're going to know exactly. You don't need to write down anything. I could literally do a top-down analysis in a couple minutes. Like, I don't need to spend 20, 30 minutes a day doing a top-down analysis, because once you get in the habit of doing this, you're going to know exactly what you're looking for, okay? So we're going to get started with gold. You see how I'm on the 5 minutes right now? So I want to go from a top higher time frame. So if I'm doing intraday trading or scalping, I like to go start off on the daily and then I move into the hourly. Hourly is your choice. You could either go to the 4 hour, a 2 hour, a 1 hour. I will go through all of them for us. I'll go daily, 4 hour, hourly. And then when you get to the minutes, again, it's your choice. You can break down the 30-minute levels, you can break down the 15-minute levels, and then finally you get to your intraday scalping timeframes if you like 5 minutes, 3 minutes, or 1 minute. Okay. And this is more for intraday trading. If you're trading within the day, like if you're trading in the day, you don't need to like mark up your monthly zones unless you want. When you do a top-down analysis utilizing the monthly, then you're more of a swing trader. Then that's where I would start off on the monthly and then start working my way down to the weekly, start working my way down to the daily, then finally maybe trading off of the 4H as my swing position entries. Okay. Now, this is gold on the daily. So remember, we talked about class 1 and class 2. We talked about all candlesticks have the same characteristics, right? Each one of these candlesticks or bars, each one of these bars represents one entire day of trading because I'm on the daily time frame. Okay. So I have no idea how the 5 minute candles have been trading. I have no idea how the hourly candles have been trading because this whole candle comprises an entire day from the opening, which was right now an hour ago, 6 p.m. Eastern for most securities, is the opening balance. That's when a candle opens up, and then it takes 24 hours before it closes. And you can see it's got an opening price. Like I can see yesterday's and now I can see everything from yesterday. See how yesterday, right here, I can verify that the date over here was Wednesday, January 14 over here. And now I can start to see what the opening price was. I can see what the highest point was. I can see the closing price. Notice how there's no lower wick. So I know that there was the candle, the day opened bullish ignited. Very strong open, okay? And there was no drawdown like this day. This day opened right here, and there was a big push up. It was very bullish. It got up to there, but again, it got rejected back down. It came back to the opening balance, and the sellers flipped the opening balance back down to bearish. Where they came down, they made a low, but it didn't close down there. Then the buyers brought it up right near the end of the day, and we closed right there. Okay, so we can now start to see that multiple candlesticks make specific patterns when you put them together. Now, if I asked you a simple question, and I hope everyone can get this answer correct, what is the overall trend of gold on the daily looking at this particular time frame on my chart? So if I'm looking all the way back from July is going back in the summer months. So I'm looking at July, I'm looking at all of August, I'm looking at all of September, I'm looking at October, November, December. That's all 2025. Now I'm looking at the first start of the month, January of 2026. Oh, yeah, I hope everyone says it's in an uptrend. Okay. It's not a trick question. You can see it is moving up. Like if I just draw like a trend line and I show you, we are moving in an uptrend, okay? Bullish, right? So we have a particular trend. So I know if it's trending bullish, what are the rules trading in an uptrend? Either trade with the trend as much as you can, right? Trading with the trend is we don't always want to buy the highest points. Remember, we don't want to FOMO buy. We'd like to buy pullbacks, right? And then maybe you see there, if you bought the high, there's a pullback, better entry there, and you're in the money. Here's again highs, better pullback right there. You buy there, you're in the money again. Again, there was that big push up. If you bought the high, you see you suffer drawdown, and then it came back down to a specific area of support. You buy the discount, you buy the dip, you buy the pullback, and again you're in the money. So on and so forth. If we are going against the trend, we have rules in trading. If you're going against the trend, so I know if I'm selling against an uptrend, I know I am counter trading. So I have rules when I counter trade because you can see that counter trades don't last forever. This was a counter trade coming down. if you sold, you made some money, but if you didn't do anything, it can come right back up. Okay, so you can see again, there was a opportunity to sell right there. But you see, it was short lived. There was a opportunity to sell right there, but again, it was short lived right there. Sorry for that. Sometimes these arrows act up, but there was a opportunity to sell, but you see it didn't last long. Here was another opportunity to sell, but you see it just came into support and back up. So you can see that it's better to be buying up with the trend. Okay, if we start trending bearish, then what we're going to do is, we know if it starts trending down and it's bearish and we're making lower lows and lower highs and the markets are selling off, the best thing to do is be a seller and sell at premium areas and wait for the buyers to counter trade back up to you, and you sell with the bigger sellers. Okay, so that's what we got going on right now. Now, what can I see? Is there any? Okay, so remember we talked about day 1 and day 2, we talked about pivots. We talked about where a market moves and it literally stops and it reverses in the other direction. I can clearly see a couple pivots on this chart with my naked eye. I don't need any specific indicators. I don't need any specific talents. All I need to do is just look where the market literally stops and turns pivots, right? Remember we were talking about this? So hopefully everyone can see. I'm going to mark up one pivot, and I hope everyone understands maybe why this is a pivoting location. Okay, so one pivot that I see is this right here. Okay, I'll make it yellow. I'll make it a little bit thicker so we can all see it. Okay, see this line that I just placed right here? Do you guys agree with me that that's a pivot in the market? And if you don't agree with me, no worries, I'll explain it. But I want to know if we're all on the same page and you all understand what a pivot is. Very simple, okay? It's not complicated, guys. Look, it just comes right up, okay, right up to there, and you see it stopped going higher, and then there it came down. Okay, so that is where we have located a pivot. Okay, how about we write right here what we just found together? Okay, so we'll write right here, this is a pivot. Okay, how about we write pivot location? Okay, so this is a pivot location. The market came up and then it went right back down, right? Can you guys determine or guess where I'm gonna figure out another pivot? Remember, you want to find like the most obvious pivots, okay? The most obvious ones, get them out of the way. They're the easiest ones to identify. Here's another one right here, the double bottom. Justin, you got it right here. Like, this is pretty easy to figure out, right? When you know what your eyes are looking for, there it is. It came down and you see the black candles stopped right there, and then it came right back up, and then the black candles came right back down and they stopped at that exact location, and that's what created the double bottom, and then there's that next leg up. Okay, so we found another pivot location. Where? Right here. Oh shit. Do you guys want me to write it down like this? Does this help you guys, or just let me know. If this is, like, if you guys don't need me writing this down, you guys let me know. But if this helps, okay, so there's a pivot location. Is there another pivot location? Let's just read how the volume is moving. After it bounced off this pivot location, it came right back up there. Again, the volume stopped right there. You see, yes, there's a wick up there, but look at where the volume closed, look at where the volume opened, and then there was that push down. So that's another pivot, right? Right there. There's another pivot. Okay, so we can continue locating pivots. You can do this on all time frames. I can do this on 5 minutes. I can do this on 1 hour. I can do, remember, all candlesticks have the same characteristics. If I took the watermark off and you didn't even know I was trading gold and I was on the 1 daily, you guys would have no idea what security this guy is trading, what time frame he's trading. All you guys know is this guy is writing pivot locations and drawing yellow lines on his chart, right? Like, if I get rid of this watermark, XAU USD 1 daily, and I get rid of it, I could literally tell you guys, hey everyone, welcome to Stock Sniper Trading. Today, here's the chart. We're trading coffee beans, and we are on the 1 minute time frame. You would have no clue. I could tell you that we're trading coffee beans right now, and this is a 1 minute pivot, this is another 1 minute pivot, this is another 1 minute pivot. And you guys would have no idea. But we're on the daily and we're on gold. So the daily holds more weight. And this is when I see like 5 minute volume coming down to this pivot location on daily, that's where I'm looking to enter trades on the 5 minutes. But however, I'm looking for these exact type of patterns. I'm looking for 5 minutes to come down here and create like a double bottom and go, and then I'm buying that double bottom on the 5 minutes, and I know it's being located at this daily point of interest or pivot location. Okay, so that's how we can just very easily identify pivots in the markets. And then now I'm going to take education and I'm going to really wow you guys. So get ready to be wowed. Another word for a pivot location is a point of interest. Okay, I'll save you guys thousands of dollars, so you guys don't have to buy some fancy courses. This pivot location can also be called a point of interest. Do you guys understand that? If you don't, please don't be shy. Just tell me, Ron, I don't get it. Can you explain it? Okay. Guys, just be honest. If you don't understand this, don't be shy. Okay. This is how I learn. I'm a slow learner myself when I'm learning these things. So a pivot location, it can be, you can call it a pivot, right? Some traders call it a pivot. Some traders will call it a point of interest. And a short form for a point of interest is the abbreviation POI, point of interest. Very simple, right? Okay, so we've learned now. See, I told you guys we're going to learn something new on every single call. Point of interest, also known as AKA pivot location. So if you guys can get better at identifying pivots, you guys, guess what? I'm clapping for you guys because now you guys just identified critical points of interest. Okay? So we just killed two birds with one stone. We can now locate pivot locations, points of interest. And the beauty of this, I can go on any time frame, and I can locate these. Okay? I can go on any chart and I can locate any time frame. I can go to the 1 hour and I can locate 1 hour points of interest. I can locate 1 hour pivot locations. Okay? So we've now identified these and we know that they can be called different names. Okay? And let me take it a little further with you guys. What is this pivot location, this point of interest? What's another word for it? Who wants to, I'm not going to tell you guys. You guys guess it. There's another word we can put in here. What would that word be? What does this look like? Remember we talked about this in day 1 and day 2? My man, Pablo FX, you got it. Resistance. My man. There you go, guys. You guys see how you're learning this shit? You guys are not going to need Uncle Ronnie here anymore. You guys got this. Look it. We just learned that this one yellow line is called a pivot location, check mark. It's called a point of interest, a POI, check mark. It is resistance, check mark. Okay? Sorry, did I even spell resistance right? I think I did. See, even sometimes Ron will spell something wrong. It's all good. It's all good. I don't need to spell when I'm trading. All I got to do is be able to read candlesticks. That's how I make money. I don't make my money by spelling. I make money by reading the candlesticks. See, guys, I can make mistakes. Ron made a spelling error. Who gives a shit? Okay, we're humans. We all make mistakes. But I got to learn from it. I got to learn how to spell resistance on tomorrow's call. Okay, I admit it. We all make mistakes. No big deal. Now, okay. So what can we do with this one, right? This is a different one. So this one is a pivot location, right? This one is also a point of interest. Okay, you see how when we identify one, we can identify the other one. So this one is a POI as well. Just because it's below us doesn't mean it's still not a POI. Okay, what's the other word for this one? Support. If we identified support, remember, if we know what the brother is, if the brother is resistance, then the opposite, the sister, has to be the opposite. So if I know that there's resistance, there's the ceiling I got to know where the floor is. Remember, the only thing that's moving is the volume. The volume is the thing that's variable, okay? These are, if the volume closes below, like if the black candles come below this yellow line and they close below there, a big black candle closes below there, okay? So guess what this is going to be now? So for example, if we have a black candle coming down, let's make it black. Just give me a moment. Okay, that's a black candle. See, that's a bearish candle. Now what happens? The volume, the sellers, closed below our pivot location, below our point of interest, and below support. So now when the volume, the only thing that's moving is variable, closes below, what is now our this yellow line? This yellow line is still a pivot location, but you see it's been invalidated. It's been broken down and volume has closed below. It didn't just come down, pick up a wick and go back up. It broke below our point of interest and it broke and closed below support. So this yellow line now is resistance. That's what when I mean static, okay? So another word, look at guys, we're cooking tonight. Another word for this yellow line is static, okay? A lot of people don't understand the word static. Static line, static point of interest, okay? Static meaning, you see this line? Look at the line is going into the future. Here's today's live candle up here. See this yellow line? Look at it. This is what I mean, it's static. You see, it's still there. All I got to do now is wait for the volume to come down, sellers to sell it down, and then when it reaches this yellow line, I know it's coming to a previous pivot location. I know it's coming to a previous point of interest. I know it's coming to an area which was resistance, but the volume is above. So if it comes back down here, this could be support and it's a static line. The only thing that's above is the volume. So if it comes back down there, it could be support and it's static. The only thing, the volume. Might double bottom here, and then I might look for another buy on gold, bouncing right off of that, okay? So you see how I'm telling you, just this one line has all these different names, but they basically mean the same thing. And then my final thing that I do at this line is I place an alert, okay? So that I don't have to be glued at my charts all day. So with TradingView or any platform that you're utilizing, with today's technology, I'm sure that there is a function that you can put and you can place alerts on these static lines. So with TradingView, if you right click it, you see where the first line says add alert on the horizontal line. I can change this. I can change the wording. They use horizontal line. I can say add an alert at this pivot location, add an alert at this point of interest, add an alert at this static line, add an alert at this support. Like you see, I can utilize all of these names and it means the same exact shit, right? So I'm going to add the alert. Now you can kind of put it when you want it. Do you want it trigger only once per bar close, once per minute? The alert will trigger once and will not be repeated. I can put an expiration date on it, whatever I want. So now that I've selected everything here, I want to create it. So you see now how it places the clock alerting me. So whenever gold decides, if and whenever it comes down here, I will get pinged, I will get an alert, right? And my job is not just to take the trade blindly. Remember, it's like a signal. So I want to see, will it hold here? Will it bounce off? Can I get into a buy? Also, when I get an alert, what if the sellers close it below? Again, utilizing the static location. Now, if they close it below, when it comes back up, I could be looking to sell off of there because now it's still a pivot location. It's still a point of interest. It's now resistance because now the sellers have closed it below and it's still a static line. So, and my alert is still there. So if it comes back up, I get alerted and maybe now I'm selling down with the market and I'm selling down to the next pivoting location. So this is what I mean when I'm trading tape to tape, or other traders call it like reading the tape. It could be also from one zone to another zone when I start to use my boxes to identify the zones. But literally, I could be taking a trade from this yellow line to that yellow line. This eliminates the guesswork. This eliminates me being scared when I'm in the trade. This eliminates me being greedy if I'm in the profit, because I'm trading with a disciplined approach from this pivot to this pivot. And another beautiful thing you can do in trading, just like you can do like a carpenter or any construction worker or anyone that uses a tape measure or a ruler, just simple mathematics, we can measure. When you're measuring in millimeters, when you're measuring in, I told you guys we're getting 10 to 20 centimeters of snow overnight tonight. That's in units, right? 10 to 20 centimeters of snow. Some of you guys know how big 10 to 20 centimeters is, so you can determine how much snow we're going to get. So, but we're not trading snow over here at SST. We're trading gold. So I know the distance from this yellow line to that yellow line is in fact from 4,356 all the way down to 4,195. So I know how many dollars that is in gold, and then I can break it down into pips, I can break it down into points, I can break it down into ticks, I can break it down into whatever language I'm trading, whether I'm trading Forex, I'm trading spot gold, I'm trading futures, whatever it is. You can literally measure the move. And then when it comes down there, then part of your job as a trader is maybe take your stop loss, either bring it to a break even to reduce risk. Maybe as it's coming down, you take some profit, you cash out a little bit, reward yourself in a good trade to help build your account, to build your confidence and get better at trading. Maybe you want to close the entire trade and it met your daily requirement and you're done. And now you're done trading. Okay. So these lines help us. We trade literally off of these lines. And the higher the time frame holds more weight. So when I break down from the daily and I go into the daily, sorry, holds more weight than the hourly. The hourly is still a higher time frame from the 5 minutes, but I would rather feel more confident trading 5 minute volume off these yellow lines as opposed to just trading off of a 1 hour line, because the dailies hold more weight. They've been holding for more time in the markets, multiple days, multiple weeks, as opposed to just a few hours. Okay. So just this bearish candle coming down, if it closes below, again, if it comes back up to retest that static location, it's still the same name of all of these, but maybe we flip the word support for resistance. Maybe it gets rejected and it closes below. The other thing is, same situation where it comes down and coming out for the retest. What happens if it doesn't get rejected there? What happens if the buyers push it right back above and then we close above? Same situation. Then I'm looking to buy off that yellow line because the volume is back above. If it retests this, again, it's the support. It's the point of interest. Then I'm looking to buy and take it back up to that yellow line. But then I know that if it broke down and came back up, then I know at least it grabbed some liquidity. It came down there, grabbed some liquidity, and went right back up. When it was coming up, it did not get rejected to go down in a sell. It came back up, closed above. I verify that. I can see that. Then I wait for the pullback, and then I buy at that exact location. Okay. And then my goal is to take it back up to here, but not always necessarily. Maybe I'm happy with taking it, testing maybe like up to that bullish candle right up there. And then again, I could be looking to take a target right up to there. Okay, so, and then what I also look at, okay, when I figure out a pivot location, I like to look at the psychological number, the price tag. And then if the price aligns up with a nice psychological number, we know trading our instruments that whole numbers are psychological numbers: 4,000, 4,100, 4,200, 43, 44, 4,500, etc. We can break it down into 25-point increments. The markets like to use 25 points. Interest rates are based off of 25, 50, 75 points, one whole point. If I have $1, I can break that $1 down into 4 quarters. So that's how you can go from 4,000, you can go up to 4,025, 4,050, 4,075, 4,100, so on and so forth. So if I see that my pivot locations line up with a nice psychological number, that strengthens my understanding of that location. Why? Because I know we're not going to get into it tonight, but auction theory. When you understand efficiency of the markets and transactions, like to like to transact at these psychological numbers because there's more pending orders at these psychological locations. So when I know that, that's where I want to be trading off of because I want to be trading with the bulk of all of the volume, right? I don't want to just trade in no man's land, right? So I want to be trading where the smart money is waiting to get into the market, okay? And it just takes patience and discipline, okay? So I'm just going to continue with what we're doing. So hopefully we got a good understanding of just how to identify a pivot location, okay? One other pivot is right up here. See where it came up and stopped, okay? So right there, let's mark it up. Right there. And one thing that I do, maybe some of you guys are wondering, is Ron, why didn't you mark up the wicks, like the top wicks? It stopped up there. Again, you are correct. Okay. If you mark the wicks, okay, again, please pay attention to this because I get asked this question a million times. You can mark the wicks as a point of interest as well, okay? But you're marking the highest point. Again, I told you guys about the importance of a real body. That's why I focus on the body of the candle, where it opens and where it closes, okay? But if you do the wick, you're correct. But what I would do is stay consistent. If you're gonna mark up the wicks, stick with the wicks as you mark up, like this point of interest, like right here. If you were going to mark that one, stick with the wicks. You know what I mean? Make it consistent. If you're analyzing wicks, or if you place your Fibonacci retracement from the swing highs, swing lows, and you're marking the wicks, make sure you mark the wicks on all of your analysis. If you do the wicks on the daily, make sure you do the wicks on the hourly. Make sure you do the wicks on the 15 minutes. Make sure you do the wicks on the 5 minutes. Why? Because you keep it consistent. Don't do the wicks on the daily, then go and do the bodies on the hourly, then go back and do the wicks on the 5 minutes, because you can see how you're not consistent, right? I don't need to explain that anymore. We want to be consistent with our analysis. A more consistent analysis, you'll yield better results, okay? Plain and simple. We don't need to, question this. We don't need to go down a rabbit hole. We don't need to debate this or debunk this. It's just stick to consistency. That's it. And you're not right and you're not wrong if you do the wicks, okay? And I personally prefer doing the bodies, okay? I talked about this because that's the real volume in the body. So when I do it, I stick with the bodies on the daily. Again, when I look for the pivots on the hourly, I stick with the bodies. When I find the pivots on the 15 minutes or 5 minutes, I stick with the bodies, okay? And why? Just because I like to stay consistent. That's it. So hopefully I explained that and you guys have a good understanding of that. So I'm going to just stay consistent and keep my static location, point of interest, a static line, pivot location right there, okay? And then we can continue doing this. So you can see I've got a location down here, down here, down here, and the volume is trading all the way up here. So you can see that these might be irrelevant for now, but at a later date, who knows? Maybe gold might be trading down below 4,000 in the month of February. I don't know. But if it ever comes down there, I know that there was a bottom there and a bottom there. So if there was buyers there, right there, 2 times that took it up, if gold ever comes all the way back down there, why would it not be a third bottom? These buyers there, those buyers there, maybe they're going to be waiting there to get back in the market and take it back up as well. Okay, so that might be a nice high probable setup that comes down there. And then when it comes down, again, I trade with proper risk management. I look for my setups, and I look for everything I'm looking for. Okay, so I'm going to move a little bit faster now. Okay, so guys, if you don't mind, I'm just going to get rid of these things. What I'll do is I'll keep this up here. Okay, so we can really focus on what we're looking for. So straightforward, guys, are you following me? This is not complicated, correct? Is it easy peasy so far for everybody? We got 1 more hour, so we're gonna bang it out now, okay? So I have only located static points of interest. Have I located any zones? I have not, okay? Now, how do I locate zones, okay? So this is where you really have to pay attention, because this is where I lose a lot of people when I do this, okay? So let me explain. Let me zoom in so maybe you guys get a clear understanding. And if you guys don't know how to locate zones, then this is the time to pay attention, okay? So now that we've located this yellow line right here, right? Now let's just take a peek below the yellow line. I see a wick, I see a wick, I see a wick, okay? Do we all, can we all see those wicks right there? I'll use a neutral color so you guys know what I'm looking at. Okay, so I'm going to zoom in because when we learn how to do this, we're going to learn how to do this on all time frames. So I don't mind taking my time on this. Okay, so now I want to locate where there's a zone. Okay, so I got a proper point of interest, yellow line. Now I see a wick, I see a wick, and a wick. So this is how I kind of consolidate those wicks. Okay, if it's a massive wick, it doesn't make sense to do that. Okay, I want to keep it, like relatively consistent. Okay, and then now let's back test. Okay, remember what I was saying? It's important to back test. A lot of traders fail to back test. This is how I learned how to do this. Now, when I go backwards, I want to see how volume reacted in this location previously in the history. Okay, so we have to look backwards. Let's move backwards. Let's move back. Let's move backwards. Let's continue. And then now continue going backwards. Now what do we see? Okay, I see a massive bullish ignited candle that was created Monday, October 6th. It opened and look at it, closed near the high. Closed, it opened, it came down to retest, but when it retested, did it come back into the point of control of this big body candle? The answer is no. The lowest point was that wick, and that wick. They created higher lows and continued to go up. So we have not, you see, there's been no transactions in that big body down there, okay? So when we identify it now, that's why it's important when I always tell you guys, when you identify a candle opening and to your next pivot location or point of interest, that's when I say, guys, sometimes it takes one or two bodies and you can already consolidate the volume. So you see, had I done that previously right there and I stretched it into the future, I can now literally see that wick come in there and that wick come in there and that wick come in there. So, when I see bullish, right, I color code my zones. Bullish meaning buyers, bullish meaning green. Okay, this is how I identify my zones. I do it with a green box. Okay, so that volume right there, it's buyers. I identify it with a green box, and now look, I stretch it into the future. So had I been patient and disciplined and had possible an alert inside at that yellow line, at that pivot at 50% or at the bottom, I would have been alerted when that volume came inside there and I could have possibly bought out of there, okay? But the buy did not last very long. It didn't go up because it's trending down. So when it came back down, it came back into that location and provided a higher low at that pivot. There's the W and there's the double bottom, and the double bottom traditionally has more volume, and there's where you literally see it with bigger volume breaking this resistance and continuing to go up to our next pivot. So now that we've located the box, everyone says, Ron, that's easy, but this is the hard part. Guys, believe it or not, this is the most difficult part. After you identify it, this is the hardest part, is learning how to stretch it into the future. Believe it or not, that was the hardest part because it took me a lifetime to learn how to stretch it into the future, understand that this is a static block in the market, and if the volume comes back in here, we may get another opportunity to buy out of there, right? If it closes below, then what do I do is very simple. If it closes below, I see that the sellers have came through that buying zone, like that's a big black candle, and I will make it black. One moment. I know you guys are saying, Ron, you can't spell and you're also colorblind here. You can see how it closes below there. As soon as I get a confirmed candle closing below that zone, I do not change the size of it. I don't make it bigger. I don't make it smaller. All I do is, because I'm a color coordinated person, I have been doing this since I was a kid, and I'm going to continue doing this. I make it red. When I see red, a red box, it tells me that this is sellers. It tells me that this is offers. It tells me that this is resistance. It tells me that this is could be supply, right? All of those words, okay, mean the same shit. Mean if it comes back in here, sellers could be offering there. Now you see how the zone has been inverted, and now it could be more sellers, and that could be that little counter trade, that pullback coming into there. Now the sellers absorb them and they're ready to take it down and create a new lower low in the market. Okay, but you can see I can take a trade off of this zone or this area, whether it is a buy or a sell. But I just have to be patient and disciplined and watch how the transactions are occurring down here. Same thing is if it's a candle that comes down, picks up a wick and goes back up like this, it comes down, it's a big black candle, it's coming down, it's a daily candle. Near the end of the day, it picks up buyers, picks up a wick. Then all of a sudden it closes back and it flips into a hammer candle and it's closing near the high. And I've got a big bullish blue candle closing up here. And then now I see what happened. I literally seen that big black candle break, catch a wick, get rejected, go back and close near the high. So then this zone is still a green zone. But now I've got more context. Remember, I got more context to what happens. I see it come down, get rotated back up. Then what I could be looking for, again, it could either be ignited bar and ready to drive. I go in a buy, or it could come back down and literally retest and then go back up. Okay, but you have to watch what's going on there. That's why if you trade on impulse, you could make some critical mistakes. And then you're going to be like, oh my God, why didn't I just wait for the candle to close? And I could have eliminated that mistake, right? But trading in real time is a different story because there's so much emotions and the market presents you with all types of situations. So the best answer to that is when in doubt, wait it out. Just watch what happens. If you do trade on an impulse candle, this is the other option you have. I trade on impulse candles myself too. But there should be some type of intuition building up and you feel confident taking that. You're watching how it's developing. Maybe you caught a big whipsaw candle and now you're trading with that momentum. You're reading what's happening and then you can trade with that. Another option is if you're simply like kind of, I don't know, would I do this? Should I get in? Maybe I get in. Just use a smaller sizing, micro sizing, a feeler trade. Feel it out. If it goes against you, you can literally close it, minimal loss, you learn from it, and you move on. And you can maybe understand that yes, you got faked out, you controlled your risk, they caught you, but it was a small loss. You donated a couple dollars to the market, you bought him a coffee, and now you see it closed above and retesting, and now it's time you're going to get rewarded with a steak dinner now, okay? So sometimes you got to give up a coffee to be eating steak and lobster later on. So that's the way I look at it. Sometimes I donate to the market makers a couple dollars, but I know I'm reading what they're doing and I'm going to come back and I'm going to pick up a steak and lobster dinner off of them. So that's how I manipulate the markets and how I manipulate the trading for myself, right? The markets are manipulated, so I need to manipulate my trading as well. I'm not a 100% patient and disciplined trader. I'm going to admit it to you guys. You know, it's very, very difficult to do that as a scalper. So there is some situations where I do trade on impulse. However, I have rules when I trade like that. I have counter trading rules, I have impulse trading rules, I have feeler trading rules, I have rules when I'm 100% it's an A plus setup, I'm 100% confident, I'm not using a feeler trade, I'm going in my standard lot sizing now, and I've already calculated my potential loss if I do get stopped out. That's already worked into my daily loss, and then I'm just following the volume. I have no emotions attached to the trade. I'm trading like a robot, right? So that's how we got to get that mindset, guys. And I know a lot of you guys are almost there. You guys are almost there with the mindset. And once you conquer the mindset in trading, you've conquered trading. You can learn price action very fast. You can learn this in literally on this call, but you cannot learn mindset in one call. You can't learn mindset and psychology in 1 week. It takes traders a lifetime, literally. I've been trying to master my mindset in trading for over 20 plus years now. And I'm still having difficulties as well on some days. You know, it's not easy. It's one of the most difficult things you can do in life is learning how to control your emotions in trading because You could be up money in one situation and then you're in drawdown in another situation. You've blown up an account today and then you're winning $10,000 the next day. Like, the emotional roller coaster and the financial roller coaster is crazy. So you have to be able to be level-headed and understand in all situations. Don't panic. Don't get pissed off. Don't get mad. Don't get upset. This is how it is to be a trader. You have to understand, guys. Do you guys understand this? I know it doesn't have nothing to do with a top-down analysis, but the psychology and the mindset leads to everything when you're trading. It's very important, guys. I could spend a month talking about psychology and mindset, and it's very important. I know how important it is because I go through this shit every single day, and I know how important it is. Okay, so you really, if you're still struggling, maybe it's not your price action. Maybe it's you gotta start to understand how to get a better mindset at trading. Okay, so that's a zone. I've identified it. I've stretched it into the future, right? So when I locate one zone, I like to look for the opposing zone. So again, if I found a green zone, where can I find a red zone, right? And then let's identify one. Okay, this one, now we can see in the past they've been created. Now this is the easy part of doing a top-down analysis, especially when it's been created, because now all you got to do is locate it and stretch it into the future. So right there, again, the pivoting location. Anytime you figure out a pivot, there's something that happened up there. So right at that pivot, again, I can locate the yellow line and I come down to those bodies. Do you see what I did there? I will zoom in again. I will make it neutral so everybody can see what I just did there. Remember, I base everything off of the yellow static line, the point of interest. And this can be on all time frames. But you see how now I opened it up with a little bit of a zone from the yellow line and I brought it down to the closing body. Again, this is why I'm obsessed with bodies closing and opening, because you see that blue candle closed right there and then it opened right there. So right there, sometimes, just capturing that location, I've literally figured out a zone. Okay, now I can stretch it in the future. And then someone will say, well, Ron, what about you missed those wicks above? Great question. I'll answer that. I'll answer it for you. Then you see how the yellow line, guys. Okay, this is the importance when you learn about a point of control. Like the yellow line is your 50% cut line, right? And then you've got a little bit above, like the ratio on Fibonacci right here. If I show you the Fibonacci tool right here. So you see how I placed it? Guys, you see how I do this? Okay, let me just fix my Fibonacci so we're all focused here. I'm going to go to style. I'm going to get rid of the 0. We don't need that. We don't need it for this situation, what I'm teaching right now. Get rid of the 0. Get rid of the 236. Get rid of the 786. Get rid of the 1.618. Get rid of the 1. All I'm concerned about is the 0.382, okay? This is a very important one. This is part of our golden ratio. So we want this checked 100%. We want to know our cut line, 0.5. This is very important. This is probably the most important. If you don't have the 0.5 checked on your Fibonacci, make sure you check it off right now. And then the final one is the golden line. It's the 0.618. I'm not going to go into the mathematics of how this is all calculated because that will take a while, okay? But it's very simple. It's permutations. 1 plus 1 is 2. 2 plus 1 is 3. 3 plus 2 is 5. 5 and 3 is 8. 8 and 5 is 13. 13 and 8 is 21. So on and so forth. I can do that unlimited permutations until infinity. And now when you divide those numbers, if I divide 21 divided by 13, I'm going to get some sort of ratio. It's one of these type of ratios. Okay. This was invented by Leonardo. I was going to say Leonardo DiCaprio. Leonardo Fibonacci. A little older than Leonardo DiCaprio. But they're both Italian. But yeah, they're experts in math. Okay, so we've got those now. Now what we do is, now you see here, if I line up the 0.5 at my pivot location right there, you can see that I've got a little bit of a zone, like you can see right there and there. If I went with the Fibonacci, like I have a zone right there, right? You see it? But but it's above, a little bit above. The same standard deviation above is the same standard deviation below, exactly the same, okay? So what I like to do is, I base it off of real-time price action. So when I see the yellow line and then I come down to the bodies, if I wanted, I do the equal distance that I have this neutral zone, I do the equal distance above, right? You see what I did there? So that's when someone says, well, Ron, why didn't you capture the wicks? But you can see how mathematically you can literally do this. The same distance where I placed it, my starting point is the yellow line, and I bring it down to that body and that body. You see how if I extend it the same distance, I kind of engulf all of those wicks, and there's your zone. You could literally figure out your entire zone. And that is it a green zone? No, it's got to be a red zone because the buyers came in there, they got pushed back down. Buyers came in there and then they pushed them right back down. So that is literally a red zone that we have just identified in the markets, right? So now that we identified it, we're not done. Stretch it into the future. The price will eventually come back and transact in this zone. And there now we see it. We see the actual evidence, the footprint left behind. It came right in there bullish, right in that red zone again. What were the results? The red held up, sellers held up, pushed it back down. Next day again, it came in there, sellers pushed it back down. The third time it came in there again, sellers pushed it back down. It came in again. Look how many times it came in here and was trading there. But you see, it's still making off the bottom. Higher lows, higher lows. It's still coming up. The depth of market is still gaining momentum, but it's not breaking any highs. Finally, this bar, Monday, December 22, opened bullish ignited and broke right through and literally closed above. So this goes with our rules. The zone is static. The zone is stretched into the future. The only thing that moves is the volume. When the volume closes above, that's showing me the buyers broke right through there, convincingly closed above. I can see it, the volume is above. I flip the zone green to indicate that if it ever comes back down into the zone, that's now could be pending buyers. And I can see exactly when it came back in, it went in the zone, back up, back down, kind of consolidated in here. And look at where the big bullish candle, the start of the new year, the first day, Monday, January 5th, it started the explosion of gold, literally hitting a new all-time high. So you see how this green zone is still holding up? Stretch it into the future, right? If gold ever comes back down, it possibly will come back down to test this yellow line first. If it can't hold, right there. Will it hold up in there? Will it go back up? Will it come back up and it's a lower high and the sellers break right through that? And if it closes below, same situation. Sellers close below, same zone, same size. I've already determined it and now I just make it red. So I wait for those pullback buyers buying on a dip to bring it back in, and bigger sellers are here now locating their offers in that zone. The block has flipped now because of the verification of the bearish candle closing below. So now the more offers from up here, all-time high, are coming down into here. Some of these pending buyers now are seeing, oh man, the market might be now selling. I want to now cancel my pending buy orders here, and I want to place them maybe at this yellow line, or I want to place them lower. I want to buy at a discounted rate. I don't want to buy right here. I want to buy right here, right? So think about what the market is doing. It gets those early entry buyers. They come in. They do exactly what the sellers want. Sellers are offering. They absorb them, and now it's ready with that lower high to continue to push down for a new lower low. Okay, so that's how now you can utilize zones as levels of trading as well, just like these lines, okay? So this one is still technically green. We stretch across into the future, okay? So that was where I found a green zone, stretched into the future. That was a red zone, but the volume is all the way up there, so it's still green, okay? So you see now how I've located some blocks in the market. I can place an alert at these locations and wait for the volume to come to me, okay? So now, to continue to go on with our top-down analysis, holy shit, it's almost 8 o'clock. See, I can go forever on these calls. I'm telling you guys, I can go 5-10 hours straight without even taking a break. When I get into this, guys, some guys ask me, Ron, are you literally pissing in your pants? How the hell do you sit at a computer for 5 straight hours and you don't even move? It's because I'm used to doing this. It's like a job for me. I do this a long time, literally. Like I'm telling you guys, I used to trade with a diaper on. when I had kids in diapers, I was also in a diaper here too. It's facts, you know. Dave and I trade in diapers. I'm saying that for the whole world. If someone's gonna soundbite that and make a reel out of it. It's okay. It's all good. I'm not ashamed of trading in a diaper. I'm getting old. I'm getting old, guys. Gonna be in Depends here soon. Now, continuing. What is this? 4,642. Is that at an all-time? Is it an all-time high? How do I know? What if today was my first time trading gold? And I don't know. So how would I determine if this is the all-time high? I have to go on a higher time frame. So I literally have to see if volume has been trading above this yellow line. I'm on the daily. I got to go to the weekly now. So look, I'm on the weekly. I'm going back. I see this big, huge move. Look, coming from 2020, coming up. No, coming all the way up, coming all the way up from here. So look, like when I go back, I can literally see the lifetime of gold over here. 1980s. I was born in 82, right there. I bought the dip right there in 82. I've been holding since then. Holding from a diaper in 82, and I'm holding in a diaper now, almost 44. And there it came up. There was a pivot right there in 2011. Gold bottomed out. There was a nice supporting level in 2015. We came back and we kind of topped up at these highs over here in COVID in 2022. And then now we've got a massive breakout. Okay. So I see that the volume has not been trading above this yellow line. So even if I go on the monthly, I don't see any more trading volume. So I have to know we're at the highest point possible. So I either now have to start to identify price discovery. How do I do that? What if gold keeps driving up here? I have nothing to base any analysis off of. I have no prior zones to look at. I got no prior candlesticks to look at. Gold has never in the history of gold traded this high being plotted on a chart. So this is where you got to use your psychological areas. I have to now determine pivot locations myself. So how do I do this? Same way, psychological areas. If I know that the price is 4642, what would be the next logical area? Okay, I know it's very simple, 4650, but we're so close there. So this is where I can start to determine a zone. Watch what I'm going to do here, okay? And pay attention to this. There's the yellow line, all-time high, okay? So I'm going to make the yellow line orange. I do it for Donald Trump's makeup face. Any all-time high, I make it orange, okay? Just so you guys know. Any orange line you see on my charts on any security is an all-time high. It's dedicated to Donald Trump's face, okay? There it is. Orange line, think of Donald Trump's face up there. All-time high. He's pushing the markets to the all-time high. Whether it's through manipulation, I don't know. I'm a nobody. But it came up there, and now do I see two bodies? Yes, right there. There's literally a close and an open. So I'm going to make it neutral, just so we're on the same page here, okay? And then I can go backwards, and then I can look. I got a wick in there and a wick in there, okay? Didn't Ron say, why don't we do equal distance going above the orange point of interest? Equal distance right there. Now I've given myself an all-time high zone. How do I complement it? I complement it by making it red. Red letting me know that this could be where sellers are now, okay? If the buyers prove to me, okay, maybe they say, Ron, we'll prove to you that this is not sellers. I say, okay, prove it to me. So then I got to see a big blue candle break through here, create a new all-time high, maybe 4675, and close it above there. If they do that, okay, I respect the buyers. My zone will just change to a green box. I'm more than happy buying a pullback. If gold comes back down in here, I would love to buy a 46.50, 46, and maybe take it up to, who knows, 4,700. Maybe we go up to 47.50. Maybe it's on its way up to 5,000. If shit intensifies in Iran, if shit intensifies in Russia and Ukraine and China and USA and everything all over the place, shit is gonna get crazy. And more hoarding of gold is going to happen, okay? But if we have peace tomorrow, which I hope, I pray to God that there's peace tomorrow, then gold might start selling off. Then we know where our selling zones are, okay? And then we sell. And then we do something when it comes down here. We do something when it comes down here. because we know where the buyers are. So if we sell high, we want to buy our position back down in here. Same thing if this was a 5-minute chart. If this was a 5-minute candle, this is how it's been trading last 30 minutes. I'm doing the same shit I'm doing on the daily, I'm doing on the 5 minutes. Okay, so I'm going to go with this as a red zone for now. The buyers have not proved to me that they've closed above here, okay? And they're still getting rejected at the all-time high. It's already creating a lower high today, okay? Now that I've identified the zone, get in the habit of stretching it into the future, okay? Go as far as you want. Now, Ron's been speaking a lot on the daily, okay? And then also, if you want to complement it with a trend, you're more than happy to. Start it from here. Connect points, okay? Point A to point B. That's it. There's my connection, okay? I'm not going to kind of go, oh, I think it's going to go up here, maybe down here, or this or that. One point, point A to point B. That's it. You got a connection, go with it. And then just extend it out like that, okay? And you can see how I even color code my trend lines. See how it's black? I make the trend line yellow. So I know if the volume ever comes back down to this trend line, I know that it is a daily trend line, okay? And then now when I have confluence, you see where the daily trend line meets my demand zone and my point of interest? If the volume comes down like this, sellers sell it down, that might be a sniper entry right there. Not only do I have the trend line identifying that location, I also have that yellow pivot point from over there. I also had that red zone that's now converted into a green zone. That might be a nice time to maybe potentially look to buy and take it back up there. If I'm waiting there, I set an alert and I wait there, okay? And the same situation, if it closes below, okay, then the zone is the trend is broken. There, they broke the trend, they closed it below. The green zone turns red. I look to sell, right? So I'm looking for either a buy or sell there, but I'm leaning towards buying because I want to trade with the trend and buy the dips as much as possible, okay? So that's a good analysis of the daily right now. Now we also have one more thing before I go in, is points of control, okay? We've learned about points of interest, POIs. Let's talk about a point of control really fast. So POC are these big body candlesticks. Don't worry about these little skinny things, okay? These little skinny candles with barely any nutrition. They look like they're hungry. They haven't eaten in a couple days, and they're fasting. We don't trade fasting candles, okay? We want to trade candles that are bloated. We want to trade candles that went to a Mandarin buffet and it ate at an all-you-can-eat buffet and it can't even breathe anymore. And it passed out and wakes up the next morning, okay? That was literally me when I went to the buffet. But that's what we want to find, okay? So think about this. We find fat, bloated candles, okay? That's the term we're going to use. Fat, bloated candles, okay? Very easy. Very easy to understand that analogy. We don't want to trade these skinny fasting candles. These things are too much in shape for us. These things are on a diet. When they're on a diet, they have no volume. They haven't been eating. We want a big candle that's been eating a lot of volume, okay? There's a quick analogy. That's how I teach my kids. We don't want to trade these skinny ones. We want to trade the big fat ones, okay? So the big body candles, that's what we target. This is a big body candle right here. So let's now utilize our Fibonacci. Let's put it to the test. When we get a big body candle, what do? We grab our Fibonacci tool, also known as our POC indicator, okay? I place it at the opening price. We did class 1. A bearish candle opens at the top and it obviously closes at the bottom. There's the opening and closing price. I plotted it from the open to the close. This specific candle on Monday, December 29. I'm not doing it with this candle. I'm not doing it with that candle. I'm not doing it with this one. I'm doing it specifically on this big fat one right here. Okay. And what am I locating? Remember, I set my Fibonacci with the 0.5, 382, 618. So first thing I'm doing is the 0.5 is also more of a point of interest that I could be possibly trading off of intraday. So there it is. I don't want to use the orange line for Donald Trump's face. I go back to my yellow because I'm basing this off of a daily candle. So I got to stick with my yellow theme. Okay. So I know there it is. I cut it in half now. Now I want to find the point of control. I don't want to just find exactly 50% of that candle. I want a little bit of a buffer. I want a little bit above and a little bit below. There it is. There it is. Okay. Now that I've determined it, I've identified it, I can pat myself on the back and say, Ron, you did a good job, but my job is not done. I still have to extend it into the future. Okay. And then now I can see, look at this day. It came up bullish, bullish, bullish. Right below that point of control, they pushed it back down. It came back up, lower high, they pushed it back down. Another bullish day came right back up, right there, equal highs with that wick, couldn't transact in that big red block, and back down, stretching it into the future. Now I see this big ignited bullish candle tap the top and close. See now the volume, it's inside that point of control. Okay, so the next bar opens, ignited, and did its job by breaking that wick. It's a short wick. It popped and came up and closed above. There's the candle bar that confirms that it closed above this red zone. Now that point of control, same zone, same shit, switch it a different color. I go green. And then now I can see when it came down, look at the yellow line, back up. It came down bearish, 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 right by that yellow line, back up and closed exactly right above that green box. Next day again, bullish, ignited, and then, it was bullish, and then it came all the way down, back to the yellow line, bottom of the yellow zone, 618, come right back up, and it closed as a bullish hammer / pin bar, and then again, one pullback and a retest. Any one of these candles you could have bought in here, place your stop loss maybe below this zone, and you're good to go. You're in the money, okay? And now that zone is, we identified that point of control, continue with that zone into the future. Okay. And now you see if it ever comes back down, maybe it will stay inside here and go back up and create a higher low. If it cannot hold this, then we're trading in the bigger block here. And I would put more emphasis on this bigger block because we're located at where it tested 1 time, 2 times, and it's at a trend line. Because this one might be, it's already been transacted, that when it comes down, we probably, maybe more orders are pending in here and it might just bypass this one. Do you guys understand what I mean by that? I don't think I've ever really explained this. You see how there's a wick and a wick and a wick that's already transacted in there? So we've already kind of transacted in this zone. So we have not really transacted into this one. So I would base more buys off of here, but I would also acknowledge this area, maybe place an alert just in case it comes down there to see if it holds up and ready to go. And maybe these offers from this zone are being applied into this one to carry the higher low momentum and to continue gold going higher. Okay, so once I identify a zone, I stretch it in the future and I wait for volume to come to me. Now, I want to see what's going on now. I want to get into trading, right? I want to get into going back into the markets. So I see a nice big bullish candle come up and close. Okay, this is a structural candle. Why? Because I have a wick there and a wick there. This candle opened, ignited, and took off and closed with volume above. This would be a nice candle to cut in half. And maybe figure out a zone off of this one because we're consolidating. Maybe we'll come back down and test this. So same situation. Again, grab my Fibonacci tool with this bar. It opened right there and then it closed right there. There's my 0.5 right there. And I can literally find a 618 and a 382 as zone and stretch it across. Okay. Now I'm ready. Now I'm ready for this week's trading. Okay. So I can see it came up, closed, it opened, went back up, created that higher high, but got rejected, came back down. You see when it came down, it did not transact in the point of control yet of this bar. And then it came up with that higher low, closed right there. So you see also a closing price and an opening price of a candle. Closing balance, opening balance. Those are also critical points of interest. So I place a yellow line right there as well. Okay. And then someone's going to say to me, well, Ron, you got a shit ton of yellow lines, right? But now I want to get into trading. I want to trade maybe tonight. I want to trade tomorrow. So I have to get some fresh candles that have closed and opened. And this was a bullish ignited open. Again, I look at the number 4,585. It's not necessarily that psychological number that I'm looking at, like that 75, that even number, but it's still a good number, 85. Then I see it came up bullish, bullish, bullish. it created, that's the all-time high. I know now Wednesday, January 14, we hit the all-time high, came back down and closed. Okay, there's the closing price. And you notice how I placed the bottom of the red zone at the closing price and the opening price is the red zone. I know this when I'm doing this, but for you guys, if you want to place a yellow line again at the closing and the opening price, you've now determined another static point of interest. And this one coincides with that number 4,625, that 25 increment. Okay, so now we're going to dissect this candle that is open and live now. Okay, so we're going to continue with this top down analysis. There's my closing, my opening balance. I see that it was originally bullish when we opened. It was blue, blue, blue. It came up, and that's the highest point of this candle. So that's where I identify, remember, OHLC so far, but this is a live candle. It hasn't closed yet. So when I do this, this is just temporary right now, but that's my highest point of this candle right now. So I use a purple line. I use a purple line to identify the high of the day. Okay, I'll even write it down here. That the purple line is the high of the day so far. Okay, because this bar has not closed. High of the day. Ron is high too. Ron is at the highest point of his day as well right now. So this is the high of the day so far of the candle, and Ron is at the peak high of the day of his day so far too. Probably Ron's going to get a little bit higher, but so hit the high of the day up here, got rejected. Let's locate the price. 4633 came down back to the opening balance. The candle flipped now, so those opening buyers got absorbed and the sellers are overwhelming them. They're overtaking them. They're absorbing them right now. They're offering more than there's buyers, and it flipped, and it was bearish, 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 where it stopped. It's like a pivot point where it stopped. We can literally see that. There's the wick. That's why wick analysis is very important. We locate the wick. See the lowest point right now? Look at the number. 4602. So we're $2 off of a nice psychological level of 4600. So that's a good supporting area. I could even, if I really want to do this off of the closing volume of this candle, I could have found the open, the close, I could have cut it in half and then found the point of control, and I guarantee you we're trading right in the point of control of this bullish body. How do I know that? I will show you. Opening price, closing price, there's the 0.5. Where's my zone? 618382. There it is. So you can see how today's wick literally just came in and retested 50% of the previous bar. Okay, like clockwork. So it came in here, and look at it, rejected. So what did it do? What has it done right now in the last three hours? It came in here. There was pending buyers waiting. They didn't get to buy the highest point of the day. They waited for the candle to close. They did not buy up here that candle when it opened. They didn't get sucked in. They waited for it to come down. Then they had their pending orders waiting in that point of control. And guess what? They got picked up. They got executed. And it just jumped from 02 up to 14. Last time I did my math, that's $12 move. So that's 120 pips going up. That could literally be your goal for Tokyo session. 100 pips, 120 pips, and you're clocked out. Clock in and clock out. And you waited for that opportunity to buy the dip in that point of control of that big bullish candle. Easy as that, okay? And now, if you want, you can continue to stretch that, see if it continues to hold tonight, or will the sellers come back and break it? And then just simple thing, if they break here, then they're probably going to want to come back down and engulf that entire blue body that's still left at the opening price. Then when it gets to the opening price, will they break it? Will there be a wick? Will it come back up? All of these things to determine. But right now, the buyers are still there. That is a higher low, and they're still holding the trend. But notice when it came up, it did not do its job when it opened to continue to fill that wick and create a new all-time high. So it failed to do its job so far. But this candle still has 21 hours to go. So there's a shit ton of time. Okay, we got to go through a whole days of trading. Now, I've located a lot on the daily, okay? More than I normally do, but today's call is all about top-down analysis, and I really want to break this down, okay? And then if you see that there's a lot of lines kind of clumped together, then just eliminate some, or if you think that this yellow line is too close to this one, get rid of it, okay? And then just, you can do that, okay? Kind of keep your charts a little cleaner if you like, and focus on the bigger bigger areas. This one, this one. Okay, you don't have to have a line every $5, right? It might be too much. Okay, so now what's going on? I see that the market is consolidating. Where? From this yellow line to that yellow line, right there. This is where we're flagging right now. This is technically a bullish flag. Here it came up. We're still holding. It's flagging, flagging. It could continue to break out and continue to go for a new all-time high. Okay, but we still have a lower high that's pushing down, and we have black volume that could literally come back down and break this. So we are in a flag right now. We are consolidating. There's buyers, there's sellers, there's buyers, and there's sellers. You can make this neutral if you like. Neutral to signify that we're in a consolidation, both buyers and sellers. Or if you want to continue with the overall trend, you make it, if you want to make it green to signal that we are in a bullish flag. A bullish flag has a high probability of continuing to break in its bullish trend and breaking out. I said a high probability. I didn't say it guarantees to do this. Okay. If more sellers are coming in now at the all-time high, they could definitely start to maybe push gold down. But again, you're counter trading. If you're going to sell, you're counter trading because it could get picked up right here, could get picked up right here, could get picked up. Here's a pivot here too. It could get picked up right here and go back up. Okay. So now what I do is this is where now I become a surgeon. I'm not a licensed surgeon. I've never gone to medical school, but I'm a surgeon when it comes to candlesticks. I'm a self-taught surgeon. I've learned this shit on the street. I have no certificates. I got no licenses. I'm doing this on my own, okay? I certified myself. If ever anyone asks me, Ron, how did you get your certification to become a surgeon? I tell them I cut candles for a living. That's what I do. I cut candles for a living. It's my side hustle. I dissect candles, okay? And I'm literally doing it right now. So this is my work. This is what I do. I go from the daily. Now you see I'm cutting it in pieces. I'm cutting the daily, right, into 4-hour pieces now. So now you see how I cut that daily bars now into each one of these bars is 4 hours. Now we're looking at 240 minutes of trading. An opening candle and a closing candle is 240 minutes. It also known as 4 hours. Okay, so 4 hours. They have big body candles. They got consolidation candles. They have ignited candles. They have candles with small wicks, big wicks. They got engulfing. Everything we learned. Now we're just going to a new time frame, 4 hours. Okay, so 4 hours. When I'm trading any security, I like breaking down the 4-hour candle into kind of sessions. So I know starting at 6 p.m. to 10 p.m. kind of is the start of the opening day's balance. A lot of candles open at 5, 6 p.m. and go for 4 hours till 10 p.m. So what does that consist of? It consists of Tokyo. It consists of futures market open. Then it closes at 10. Then we have a new 4-hour bar from 10 p.m. to 2 a.m. That kind of takes us through Tokyo, leading into London, into Europe. And then 2 a.m. is pre-London because I know that London opens up at 3 a.m. Eastern. So then the next 4-hour bar represents all of Europe. It starts at 2 a.m. and closes at 6 a.m. So that 4-hour volume that I'm following represents all of Europe. So that's Switzerland, that's Frankfurt, that's London, all of Europe together, okay? And then now when it goes to 6 a.m. to 10 a.m., that's now where we start North American candle. That's where North American volume, that's pre-New York. That consists of COMEX. That consists of North American high impact news, CPI, PPI. Red folders are released at 8:30 a.m. Eastern. Tomorrow we have unemployment claims. That candle closes at 10 a.m. That takes off 30 minutes of Wall Street as well, because I know that Wall Street opens up at 9:30. Then I have another 4-hour candle from 10 a.m. to 2 p.m. That now there might be some, now it consists of Wall Street. It consists of maybe there's some 10 a.m. US news. Then we go into the midday of New York. Then we go through lunchtime. That's from 11 a.m. to noon and it closes at 2 p.m. Sometimes at 2 p.m. we get Treasury bond auctions at that time at 1, 2 p.m. Sometimes we get FOMC speakers at that time. If we have FOMC session, it's at 2 p.m. So that candle, 2 p.m. to 6 p.m., that's the close of the markets. It consists of power hour going into after hours trading. After hours earnings, then it closes, and then we go through the same cycle. Then we're going to get 6 new 4-hour bars that make up one daily candle. So you can see how you can break it down. So now I can see the 4-hour trend. I can see the 4-hour patterns, okay? I can see how they've been trading. They came all the way up there, again, to that daily point of interest, yellow line. So now I see how the 4-hour volume, how it reacts at my daily point of interest, because I've already identified this on the higher time frame. There it got pushed down. I can see how it accumulated. There's where it came down, bottom, resistance, back down, double bottom. There's double bottom, traditionally has more volume. There's the more volume breakout. It comes back down. It's holding up, higher low, continuing closing above, flagging. There's consolidation. There's your flag, continuing to drive. You see this big body candle? If I was a 4-hour trader, I would maybe cut this candle in half and find the point of control and stretch it across. Okay, now you can see we're trading in that bullish flag zone, this green zone. If it's a lot to look at, then just get rid of it, okay? Because now we know where we're trading. I can see how the 4-hour volume is trading inside here. It came up, back down. Came up, that's when we hit the daily high, come back down, go all the way up. I can now see there was 2 a.m., there was Europe, there's 6 a.m., came down in New York. Here's all the 10 a.m. came down. That's when we made the lowest point of the day, came back up, closed right there. That's when we hit the all-time high. I can see now on the 4-hour candle, we hit around 2 p.m. To 6 p.m. And here's my new daily candle that just opened. So now I see it opened. It was initially bullish. There's the rejection. Now you see the big bearish volume. It's doing its job, right? Its job was to take out this wick, which it did. Okay, so you see there's a 4-hour pivot. There's where a 4-hour candle closed and a 4-hour candle opened. So right there, I found a 4-hour pivot. I found a 4-hour point of interest right there. You see how I place a line? It's not a purple line because I know my purple line represents the high and low of the day. It can't be a yellow line because I know my yellow lines represent daily. I'm on a 4-hour. So how do I determine my 4-hour? I use a white line. Okay, so I know now anytime volume comes back to this white line, I know I'm trading at a 4-hour point of interest. Okay, anything I do on the 4-hour, 2-hour, or 1-hour is always a white line. If you only do 4 hours, then you know it's 4-hour. If you go to a 1 hour, you know, like I know if I'm going from a 4-hour, 1 hour, I can even write here with a simple text, scroll on it, text, I can write here that this is a 4H. Not a money sign, sorry, 4H POI. Okay, and then I know if it comes back to the white line, if it comes all the way back up, back up, back up, I know it's coming to a 4-hour point of interest, could be resistance, and they push it right back down. And if the candle bar was to close like this, there's you're literally like kind of cutting it in half by utilizing the point of interest, okay? So now, does it have enough push to continue to take out that low wick right there that was created at 10 a.m.? Can it create a new lower low? But maximum, if it comes black, 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 now I'm trading at a daily point of interest, this 4,585, because I can see a 4-hour candle broke below there, swept the liquidity, came back, look at where it closed, right at the line. Where did that bullish 4-hour candle start on Tuesday at the opening? Was right there. So if we come all the way back down, this is where maybe I want to place an alert tonight, add an alert there, and if I get it, maybe if it comes all the way down there, maybe I get alerted. Maybe I can buy off of that. Maybe if it closes below there, that's my resistance. And then I'm selling down to fill that wick and then drive right into my big green box. Okay. But right now, and then look at what's going on at the all-time high. If you guys don't see this, try and smoke a blunt. Maybe you'll see it. Look, it came up. There's the yellow, the point of interest, okay, the neckline. It came back up. There's where it hit the all-time high. Do you recognize that pattern? There's your M, and now the M is breaking on impulse. This is an impulse break because it still has to close in 1 hour and 36 minutes. So it still has 90 minutes. It could just come down here, get a wick, and come back up and close above here and retest this, and all of a sudden gold's going back up to the all-time high. Okay, but right now we've got some selling volume. Now it's the second leg of the M pattern. The second leg traditionally has more volume. Just like when we see a double bottom, this is the opposite. Double bottom is like the brother, the double top is the sister. This is the selling pattern. So when I say the second leg traditionally has more volume. We are seeing it right now, but it needs to break that low and create a new lower low to continue pushing down. Now, if I was continuing to trade, I would be following this volume to see if it will continue to break that wick and where this volume will close. Because if it closes below this green zone, I'm flipping that green zone red. And if we come back in here, it could continue selling back down, okay? So 4 hour, we're very bearish right now. It's still going to close in 90 minutes. If I jump into the 1 hour, now I can see, I can now pinpoint exactly which hour. This was 1 a.m., there's 2 a.m., there's London market open. Look how choppy it was on Wednesday during over here. It was blue, black, blue, black, blue, black, blue, black. When did they redistribute it down? 9 a.m. Eastern. They dropped it down. Holy shit, 10 a.m. Look how that whipsaw spin top candle. 11 a.m. no action. I saw some of you guys trading on Discord at that time saying, holy shit, the volume is very erratic, ranging, very tough, choppy. I can clearly see it on the 1 hours. Then it came down noon. We got a big, massive move at 1 p.m., 2 p.m. Trump started talking near the end of the day, and you start to see some selling. Now we're pushing down, lower low, close. It's open, ignited, push down, new lower low, close. This is where now the daily candle opens, 6 p.m. Bullish, retested that, and you see points of interest where the hourly body closed, hourly body open. Look at where the rejection took place. Then they pushed it down. Look at where it came down. Now we're trading green box, green box, green box, green box. It came back up. Look at that tiny spin top candle, doji candle at 7 p.m. That's suggesting like a pause in the market, and they're continuing right now at 8. This is the futures market. See how it's retested the white line resistance. Now we're breaking down. It's literally broke that low. So guys, if it comes down to this yellow line, that could be an opportunity to maybe possibly look to entertain a buy or continue following. Because look below the yellow line. All I have is a wick, a wick, a wick, a wick, a wick, wick, wick. I don't see black volume closing below that yellow line yet. Maybe tonight it might come down there and close below. However, it might bounce off of there and be a buy. Okay, so I can follow this hourly candle. It's closing in 34 minutes. Still, Ron is impatient. I can't wait 34 minutes. I want to go into the 5 minutes. Okay, so I went from daily 4 hour, 1 hour. Now I'm going into the 5 minutes. These are the price actions that I like to trade. I like to scalp 5-minute candles, preferably also 1-minute candles. I can see now how the 5-minute candles, you see the 5-minute candles, they also have pivot points. Like, look, guys, see where the 5-minute candles came up and they stopped right there. Okay. Now I use this red line. I use a red line on my 5 minutes. So you literally see how it came up bullish and it stopped right there. It went back down. There's the neckline. It came right back up. You can consider this all a double top. One top, all of this bullshit, 2 tops, and then there was the break and that big drop. Now look at when it came all the way back up. Again, the red line, held, back down, but they're not creating a new lower low. Higher low, they bring it right back up. Where? To the red line. See how the red line is protecting Donald Trump's face up here, the orange all-time high? So that is technically a lower high. Still holding. Back down, back up, red line. Back down. We're not closing below that yellow daily position. See this range we're in? Holy shit. Like if you were playing tic-tac-toe here, you could buy off here, make some money up there. Sell there, close your position down here. Buy here, close your position there. You can see impulse. It tried to get to the all-time high right there. And right now, the futures market, look how they faked it out, guys. Sorry, I wasn't on top of this, but I should have been with you guys because you see it came up bullish. Did anyone sell futures market? They waited, caught that sell coming down. See what I mean? Sometimes it taps into the yellow line. It went back up, but look, it's utilizing this red line as static resistance. We talked about this. This is a pivot on the 5 minutes. This is a point of interest on the 5 minutes. This is resistance. This is the ceiling. I do not see any blue volume literally closing above that location right there. I see that one fake out, but I don't want to go into the manipulation. It closed, and then I see a big bearish ignited candle. That's a clear fake out. And then you see there was the first bar right there at 9:35 that closed below and continue pushing down. Sorry, guys, that was in the AM, not right now. Here's the futures market, but you see how this red line is still continuing to hold up. There's rejection. You can sell off of this. Here's, sorry, where daily candle opened up, rejected right there. That would have been a nice bar to sell and catch some pips going down. You see now the white line is acting as the resistance. It came down, lowest point of the day, came back up, consolidated, back down, came up. No blue candle has closed above that white line. So it's, look how it's barcoding, bearish, bullish, bearish engulfed, and we're continuing to break down. So sorry, this was, here's the futures, 8 p.m., came up 8:05, no closing volume above there, back bearish candle. Maybe you sold this, 8:15 transition, back down, caught a few pips, but now the 5-minute volume has closed below this green box. So it's confirmed that 5-minute candle has closed below this green box. So now I don't change the size of the zone, I change the color. It's to let me know that this could be continuing selling. I can see a bearish fair value gap from that wick to that wick of that candle that just literally closed right there. Okay, and that's kind of the point of control. So if it comes back in here, that might be another opportunity to sell. Maybe it comes in there, it's two tops, and then that's going to make the move go down, okay? I wouldn't look for buys unless the buyers can prove to me that they can at least close above here, maybe invert that green, maybe it does something like this, and then it's targeting that and to break up there. That 4H point of interest is the white line. And now you still see, came down, came blue, blue, blue. Again, did it do its job? Did it fill that wick? No. Lower high, rejection, and it's flagging now right here. So sometimes I tell you guys, it takes a few bars to see the flag. There it literally is. Okay, so consolidate and stretch it into the future. Bear flags have a high probability of continuing to drop down. Maybe this thing will bleed out all the way down to this yellow line. This is where I have an alert waiting. So I'm not in a trade right now. I'm not looking to buy. I'm not looking to sell. I feel like I've missed the sell opportunity right now. I kind of maybe don't want to buy right now because this is where they could literally redistribute it down. I can look now in between the purple and the yellow line. I can see where a lot of 5-minute volume transacted. It came down there, picked up a wick, went back up. I can see right here, see that wick where it came down, back up. And then you see right there where it closed above, it held the red line as support. So maybe it wants to trade down to the red line, maybe catch some support before the yellow line. There it is as I'm speaking. Holy shit. Guys, anyone in a sell right now? Wow. I think we got to end the education in Tokyo and we go straight back to live trading. Wow. Holy shit. Guys, what time do we have here? 8:30. Wow. Okay. So this bar is going to close in 3 minutes. Do I just want to jump in and just trade because I'm excited? No. This is where I got to see what type of reaction we get here. So what's below this yellow line? Let's look below the yellow line. Okay, this is the yellow line, and this is below the yellow line. Okay, so I can see, do we have any, maybe, like, can I draw a zone? Okay, right there. If I was looking at this location, like now I can see, okay, because it's already printed there. So there was a nice little zone. Then I see it still held the top of that zone. So that green box is still holding. There I see a little bit of a fake out, closed below, came back, and then started that move. So it didn't really, they really bled it out, but didn't really push it down. It came back and recovered. Now with that same zone into the future, below that yellow line, okay, if it comes in there. Okay, so you see how we tapped into that yellow line? So it's already transacting with some pending orders there. That's that daily point of interest. It's closing now in 2 minutes. So let's watch the official close. Also, when I'm trading, if I'm in a sell and it's one of these big candles, that's where I literally close either the entire trade or I take partials out. Because now you see the evidence of right there, guys. I said, why don't we, place like a pending order? And if we did, we are in the money right now. That's us on that wick. If it came down there and you had a pending order waiting, you are up 60 pips right now with zero drawdown. Does it always happen like that? No. But if you miss it, it's all good. We got to wait for the final bar to close because I've seen a lot of these times where it gets a wick, goes up, and then by the candle coming down, it comes down bearish, 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 and ends up closing low and pushed down even further. But there's a live example to show you how it came down to that daily point of interest from the higher time frame when we started like 1 hour on the call to identify that, and there is your reaction. right? So that's when I know when I'm selling, I know to close my profit where the big buyers are. And if I'm waiting, that's an opportunity where I like to buy, where the bigger time frame is. This yellow line holds more weight than this red line, right? This red line I just based off of the 5 minutes. This yellow line consists of daily higher time frames. Okay, look at the rebound off of that. Look at the rejection. That wick to the body right now is 100 pips. My goodness, guys. A lot of volume trading in Tokyo. Holy shit. Anybody catch that? Oh, yeah. The markets are literally crazy right now. Wow. Was there any news right now? Let's take a look. News 8:30. Oh, we got news from Iran. What do we got? Bank of Korea. Holy shit. I don't see too much info. Guys, I'll be honest. I never see Bank of Korea reporting any news. Oh my goodness. Bank of Korea, strong semiconductor sector seen supporting economic growth. Bank of Korea removes phrase to leave room for rate cuts. I don't see the silver dump too. Okay, there's some there's also Iran. New notice to airmen issued by Iran closing airspace to all flights except international flights to or from Iran with permission extended to 3:30 GMT. China Central Bank injects 180 billion yuan via 7-day reverse repos. That could have had something to do with that. Wow. Taiwan government, lots of news. Okay, so you see how we're getting a lot of Asian news coming out of the market because we're trading Tokyo right now. So lots of Asian news. Okay. But guys, do you guys have any questions? Guys, I am so sorry I didn't get to do silver, but if you stay with me for 2 minutes, I'll do a quick silver analysis. Watch how quickly I'll do it. Okay. So let's first of all find. Do I even have silver on here? We got platinum, fart coin. Wow, we got fart coin on here. Here's silver. Okay, so I'm not gonna do fart coin. We're gonna do we're gonna do silver. Watch how quickly I'm gonna do a top-down analysis. Okay, so keep up with me. Daily, I'm starting on the daily. Okay, I can see it's been in an obvious uptrend. There's a pivot point right there. It came up and it stopped right there. Yellow line on the daily. I can see the date. That was October 2025. Pivot. See the volume close above? But we're nowhere near here. So that was at $54. I was telling everyone years ago when it was accumulating in between $20 to $30, all in here. Buy some silver, buy some silver, buy some silver. It was a steady hold, and now it's finally breaking out. But clear pivot points came up, stopped right there. So there's a pivot right there. So I know that these yellow lines are points of interest. I know that these yellow lines are static locations. Okay. Now, okay. So I know I don't have to go look to the left. I know we're trading at all-time highs. I don't want to take too much time. There's my orange line for all-time high. Notice how their tweezer top highs with the previous. Okay. So again, what is the number? $93.70. I can go up to maybe I want to mark up $95 exactly as another daily point of interest if it gets up to 95. But the best one would be $100 flat, psychological 100. Just like if Bitcoin gets up to 100,000, we want to mark that up. $100 is a nice psychological level. Okay. So I see we're in a clear uptrend coming up. Now we came up, we opened. So I got to analyze this daily candle. I see the opening price. I see the all-time high is today's daily high, and then it came all the way down. See where I have this yellow line placed at the transition from the close and the opening body? I can have a purple line right there, but it's going to be like they're going to be so close together, the purple low and that point of interest. So maybe I just get rid of the yellow line and then I base my trading off of the purple line. So this is what we got going on. What if silver continues to sell down and break down? You see what it will do? It will fill that wick and then right there, cut that blue candle in half, and that will be my next supporting point of interest right there, yellow line. So I'm imagining if it breaks down, it fills that wick, and it kind of will stop right at 50% right there. Maybe find support before it comes down to this next location right here. Okay, so right now, if I want to get into trading, I kind of look at the overall trend. You can clearly see we are in a uptrend. Connect those points, extend them out. We're still respecting this daily trend line. We have not broke it. So any selling needs to be below $80, $79. Okay. Now we're consolidating. Bullish, bearish. We're in a flag. If it comes all the way back up, silver's breaking out. We're maybe driving to $100. But right now, what do I got to do? I got to kind of dissect this daily candle. So I got to go into the 4-hour, okay? So I can see now, it was mostly right now, this daily open. We were coming up. I can see 6 a.m. on Tuesday. I can see how it pulled back 10 a.m. end of day. We started a new daily candle Tuesday. Very bullish. Continue, make higher highs, higher lows. Is there a 4-hour point of interest? Right there. There's a body to a body. So that's what I utilize my white line right there at those bodies. I know that that's a daily resistance. Right now, the volume is still below it. Maybe this will turn to support if the volume closes above and we bounce off of this. It drove all the way up, right there. We hit all-time high. Now, you see how it was like kind of staircases coming up and one elevator push all the way down. Something significant happened in the markets to cause that. But regardless, it came down. So far, it's picked up a wick and it's coming up. I don't have the time to wait for 1 hour and 20 minutes for this 4-hour candle to close. When it does close, I want to see, did it engulf this, this, this? If it engulfed all of these things behind, guess what? I'm going to figure out the point of control of this volume and stretch it into the future. Now I go into the hourly. So there's, again, if I'm getting ready to trade the 5-minute candles, I see there was an hourly point of interest of resistance. It turned to support. Right now it's still below here. So if I place it right there, I know that this one is 4H, this one is 1 hour. I can write that on there again under the text. This is 4H, POI. This one that I'm basing off now, I got it from the 1 hour. So it's 1H, POI. Sorry guys, we're going into overtime today because I got to wrap this call up. But that's 1H POI. So what happened here? We came up, okay, broke. Again, my scalping levels. There was a close of the 6 p.m. candle. That's where we opened at 7 p.m. So right there is, again, another hourly point of interest. If I'm scalping, like from this white line to that white line, let's say, for example, I'm buying from this white line to that white line. There's my daily goal. Like from $90.72 all the way up to $92, 140 pips, my daily goal. Just to feel that little imbalance right there, I'm done trading for the day, okay? Even this white line to that white line, even this white line to the, if it trades down to the purple line, those could literally be all daily goals. Now we're going to go into the 5 minutes, okay? So I got my 5 minutes. I know that this yellow line or orange line is the all-time high. I can see how the 5-minute candles were trading inside here. Now, we've got to look at how naturally, look how the volume cuts my lines in half. See where that candle opened and closed. There's the white cut line. Remember, I got that from the hourly. If I want to verify that, that's a nice candle to big bearish body candle. There's the open, there's the close. You see, I can move now, manipulate the white line right to 50% to represent that big bearish candle. There's my bearish control zone, and we're trading right into it right now. Okay, so it's coming right back off creating the lowest point of the day, coming right back up. It's in that bearish point of control. Now, we'll see. This candle is going to close in 2.5 minutes. Will it close bullish above it? And then I make it green. Maybe it pulls back and wants to trade back up to where? Not going up to the moon, but let's go bar by bar. Will it come back up and test the opening of this big bearish candle right there, $89.93? If it breaks out there, then maybe to the white line. And that's it. That could be hourly resistance that brings it back down, okay? So, but also while we're transacting in here, what if it gets rejected and then it comes back down, closes below there, and then we got one more leg coming down, again testing the lowest point, maybe a new low, maybe it holds, maybe it makes a higher low, and again it's building back up, okay? So this is the first kind of big drop, and this is the first counter leg coming back up. But if we're trading this, if we're buying, we have to know that we're counter trading against this big bearish move, okay? So if you want to trade this candle, you can, but you still have 90 seconds to when it closes. You don't know where it's going to close. So might as well just wait for it to close. Lee, I don't know if you remember, but I said in one of your trading sessions that once silver closed above $35, it would soar, and it has done that. Lee, I remember you saying that, and like it hasn't looked back since it broke $35. It's been Lee, it's been accumulating in between like $20 and $30 for like 10 plus years, and finally we're seeing the redistribution of all of that accumulation over all those years. But you guys understand how I can do like a real quick analysis? And then now what I do is I can base some analysis off my 5 minutes. So I can see the 5 minutes held right there, and then see how I draw it down to my white hourly line. That was support and it bounced off. I continue with that zone into the future. There's where it closed below. The volume is below. So now I know where my red zone is, again up there. And it's right just above that hourly. So I know where next sellers could be. Let's say, for example, the true neckline is right there. That's where it could possibly come back down and test this zone. If this zone is green, might trade in there. Then we're playing ping pong again. What if it comes in there and back down? There's my M pattern. M pattern could literally break, and then I'm taking my low of the day, and silver is going to continue to sell down. However, if it builds back up, like this is what I trade. And how I determine how much pips I'm going to look to make if I'm taking that trade right there, again, that could be 100 pips. That could be a daily goal. Like, for example, if it goes a little more, you could get up to 200, right? So it's still now transacting in here. I don't see any blue volume closing above yet. I don't see any black volume closing below. So I know that we're still in a neutralized zone. However, I want to give the benefit of to the sellers because we're still trading in this point of control. So it could literally get rejected and come right back down. And when I'm looking for 5 minute support, I base it off the close of the body and that opening of that body. So, guys, I wish I had more time to continue trading with you guys, but you see silver, it trades nice too. You can see, you can read the candlesticks as well. I can see bearish candles. I can see candles closing at the bottom. I can see ignited bars. I can see hammers. I can see spin tops. Same language, different security, all the same shit. Just pick your time frame, okay? And now you see how we're literally, look, how it's literally now came right into that point of control and sellers are controlling it back down, okay? So this is where you got to learn. If you bought, don't get greedy. That was a beautiful buy. Even if you bought that candle, you hit 50, 75, 100 pips. And if you want more, we want more, we want more, we want more, we're literally trading in a bearish point of control and it's coming down. Like, that's what I mean, guys. If you trade from zone to one zone or one point of interest to the next point of interest, this will make you more of a disciplined trader. I promise you, you'll grow your account by trading like this. Some traders will say, Ron, well, I might leave some money on the table. But I'll say, well, what happens if you left all your profit and now it's coming down to take all of your money away and then it comes after your stop loss? Then what did you do? You accomplished nothing, right? And then all you're going to do is get pissed off, revenge trade, get mad. You're going to make a nice, beautiful, profitable counter trade and you're going to turn it into now revenge trading, and now you're going to turn you might have a really bad day in the markets, and this might continue trading into the next following day. You know what I mean? So if you were, and you got to know you were counter buying that move. Like, that was a massive drop. That was kind of like a little relief rally, and sellers could literally still be pushing this down. If the buyers can bring it back up with that higher low, again, close it back blue, okay, then they convince me. They show me they're strong, and then I make this red zone green, and then maybe I'll continue to buy with them. But I want them to prove to me that they can show me their strength. Right now, the sellers are showing me their strength right now. I love it, Lee Borix. That what he says. One bird in hand is better than two in the bush. It's a great analogy. You're absolutely correct about that. So. Guys, but that's it for me. So hopefully this was our class 3 now. So we learned about the basics in day 1. We had a good session yesterday. We talked about candlesticks. We talked about wicks, bodies. We did a full top-down analysis today in depth. So hopefully this helps you guys out. Again, practice. Practice makes perfect. Don't just go trading tomorrow because you learn now how to do a top-down analysis and you're ready to go all in and deposit $1 million in the account and let's go. Just practice makes perfect. If you want to practice with a demo account, I encourage you, open up a demo account, do a thorough top-down analysis, place your alerts, and watch review the next day, following day. What happens when the volume comes to your daily point of interest? Does it make a reaction there? Mark it up, journal it, and you might just start to see more and more things are happening at these locations over time. Okay. And you will, I promise you, get better at trading. This will help you become more of a disciplined trader. This will help you look for better quality setups. This will help you learn how to know when to take profit out of the market. This will help you to determine where you're placing your stop loss. This will help you become more consistent. This will help you just overall with your entire psychology and mindset trading these markets, because now you're trading at zones and points of interest that have been transacted in the past and are showing where the buyers and sellers are. Okay. And then you can see the size of the candles. You've learned now how to understand what the opening and closing balance is, how to identify a point of control. Like literally this black candle, big body candle. It's much bigger than this one and this one and this one. Why do you think I cut it in half? And I figured out the point of control. And you can see right now how it came right in there and the sellers are there pushing it right back down. Okay. But they haven't closed it below that red line, because when they close, they've engulfed those buyers, could close, and then they could come back down and take out the low day. But always when we get to a low day, it could be building. Okay, this could be where it's building now. So this red line is still higher low. You see that wick now? It's got a higher low from those bodies. So it is creating some sort of support, but they still have not convincingly closed above this red location. So it could still come down, guys. Leave me a like if you guys can on the YouTube. I appreciate you guys. Subscribe to the channel. I promise you, you've learned something on class 1, class 2, class 3. We've gone in detail, guys. I like to take advantage of these Tokyo sessions so we can learn and we put our education to the test when we go into New York next week. So, guys, I want to thank you guys all for your attention. I know I talk crazy. I know I talk fast, but we will understand the game of trading together. Shout outs to Dave at SST holding it down in New York on the Zoom, giving out those high quality trade setups and signals, and everybody on Discord, guys. Our community over here in the commodities channel right here, guys. If you look, it's bumping in here every single day, guys. Shout outs to everyone in here. Thank you guys for all you guys do in here. Some of the names I can't even see on here, but the names that I got are Armin, Newt. Thank you guys, and I apologize, guys, if I can't see all the names here. Why doesn't it show the names? I don't like that. I can see some names, but I can't see other names. I'll figure it out, guys. But shout outs to everybody in there. See now how we're kind of barcoding? Blue, black, didn't break down, coming back up, blue, black, blue. So if it kind of closes above here, momentarily flip that red box green, maybe we'll build, and then maybe we'll drive to this next opening balance. We'll see what happens up there. But then the true neckline could be right up there, okay? But that's on silver, guys, okay? So thanks, everyone. I appreciate all of you guys. I hope you guys are learning little bit by little bit. We'll put the pieces of the puzzle together. I hope you got an in-depth top-down analysis tonight and learned how to do this. And believe me, it works, guys. Trust your analysis. Trust your gut in trading. Take your time when you do a top-down analysis. Don't half-ass it. Don't just rush it to say you did a top-down analysis. Take the time to do this. And my opinion is, when you do it, don't just do this. Like after you've done it, don't just delete everything and start fresh the next day. If you can do a solid top down on like a Sunday before the markets open up for the week, have all of your levels located with alerts, and like you're not teaching anybody, maybe you are, but if you're not, like if I wasn't teaching you guys, I would have my yellow, purple lines, all my white lines, and I would keep them throughout the week, Monday, Tuesday, Wednesday, and I would just trade up and down ping pong all day, all week throughout those. I don't need to delete them. I can clean them up. I can I can tidy them up but I don't literally every single day have to do a new top-down analysis. If I do a good thorough one on the weekends, I spend maybe, let's say I trade 3 securities. I trade gold, I trade US 30, and I trade GBP USD. Okay, those are my 3 securities I trade. Maybe on Sunday for 1 hour, I take the time out of my weekend and I do maybe 15-20 minutes, a nice analysis top down on gold, on GBP USD, and on Dow Jones, and I leave it throughout the week on those 3 securities. I'm sure I'm going to get alerts once, twice, 3 times per day at these locations, and then I trade off of those securities. And hopefully maybe I trade good for that week, I manage my risk, and I can continue to grow my account. There's always going to be growing pains. There's always going to be learning where you make mistakes. It happens, but controlled risk is what you got to do in the markets. You got to learn how to control your risk. You're going to take losses. Just because it comes down to a daily point of interest doesn't mean anything is guaranteed. Nothing is guaranteed. All we're trying to do is just trade mathematically with high probable setups. That's it. And if you can trade with proper risk management, you're doing your job as a trader. Don't get so hard on yourself if you take a loss. Don't beat yourself up for it. I take losses, Dave takes losses, Borix takes losses, everybody here at SST takes losses, okay? But the only difference between some traders is they control their losses, as opposed to full porting, as opposed to also when you take a loss, don't go on tilt. Don't get pissed off. Don't revenge trade. Stay calm, stay cool, recover, journal, learn from the mistake, and move on, okay? And guys, I gotta go. It's 9 p.m. I appreciate all of you guys. Tomorrow I will let you guys know if I can do tomorrow's call, because I have a guidance meeting at my son's school at 7 p.m. If I can't make it tomorrow, if I'm not back by I don't know guys, it's like a 50-50. Maybe I'll upload a webinar for you guys, and I apologize if I can't make it tomorrow. I'll try my best. Because it's an important day at his school. We got to pick his classes for next year. So I want to be there for that. I gotta guide him into math. I got a guy. I'm kind of the math teacher, so I gotta push him into the math classes. He doesn't want to, but I'll push him in there, and he'll be trading with us very, very soon. Okay, guys, have a good night. Thank you guys for attending with me. I know there wasn't a lot of us, but hopefully you guys learned something tonight, and I wish you guys the best tomorrow in your trading. Just trade smart. And allow the markets to come to you, okay? And we'll see you guys. Have a good day, and take care, and we'll see you guys. God bless everyone. Practice your top-down analysis if you guys can. Big Papa Pip? I love that name. Oh, Big Papa Pimp. No, I'm not a pimp. I'm Big Papa Pip, but not pimp. No, my pimping days are over. Long over. No pimp over here. Have a good day, guys. You guys crack me up. Have a good day, everyone. I'll see you guys. Enjoy your day tomorrow.
Hey guys, good morning. Welcome to the live session of Stocks Network Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.